Hey guys, Stock Saturday, and what was a sort of unusual week has turned into an extremely unusual week on Friday. So, yes, unlike the market, it looks like I'm up 21.7%, which is incredible, really. Wasn't expecting this. This is pretty much all down to the crypto miners and gold and silver somewhat, to be fair. I have been selling rather a lot. You notice the cash. Cash is over 50% of this account now. That will probably stay there for quite a while to pay for the tax. Trading212 sort of seems to be at the moment the best place I can find to have that cash, so that will stay there. But yes, 21.7% up for the week. The overall number is a little bit bigger, I should say, on the portfolio because if you saw last week, I sold one Bitcoin out of the crypto portfolio, so I've deposited all that cash in here, but excluding that cash, I'm up 21.7%, or 275,000, which is crackers to say. Compared to the S&P, it was sort of looking fine, sort of a flat week, 0.27% up, Friday morning. And then Trump sort of came out and said the Chinese are being hostile and sort of they're threatening 100% tariffs. I think that's probably a little bit posturing and won't end up going through. But yeah, that's sort of put the S&P 2.7% down for the week, and the Nasdaq 3.06%. So again, that was sort of pushing into new all-time highs on Friday morning, I believe. Yeah, looks like it, and then ended up 3.06% down. So yeah, a lot of my sort of holdings in, well, all the portfolios really, other than crypto and gold, sort of took quite a bit of a hit. Obviously, the crypto and gold stuff took a hit on Friday as well, but they're still incredibly up for the week. So, yeah, we will come back to the portfolio. But looking at some of the monthly data, we got Hive Digital's monthly report looking pretty good, and I think is sort of contributing to the quite sizable price rise on Hive at the moment. They mined 267 Bitcoin because they have now pushed up to 21 exahash. So, yeah, I think people have sort of forgot that Hive were expanding, and now these numbers are starting to sort of get close to a lot of miners that are much, much larger in market cap. I think TerraWolf and Cypher and people like that sort of, I think Cypher do about this. It's just that they have, similar to herein, about 2 gigawatts or so of power sort of for AI companies potentially. But in terms of just Bitcoin, they're doing about the same, and Hive are about a sixth of the market cap. So they are pushing on in price quite a lot, and efficiency at 18 joules per terahash. That's pretty good, and their electricity cost, overall electricity cost across the portfolio, will be coming down because of Paraguay being quite cheap. So their existing sort of EU centres that are high electricity cost are sort of being sidelined, basically diluted by all this new low cost electricity. So yeah, they should start to become reasonably profitable. Obviously, difficulty has whacked the production, but yeah, they're still looking pretty good. They are still talking 25 exahash by Thanksgiving, which is the end of sort of just before the end of next month. If they're already at 21.8, getting to 25 shouldn't be difficult at all. And that puts them down to 17.5 joules per terahash. So it is nearly sort of objective complete, I would say. We just need a bit of a rise in Bitcoin to sort of get them going, but that's kind of got knocked yesterday. Sort of Bitcoin down, well, 15,000 from the top, but yeah, a little bit less, sort of just on Friday. So in normal stock world, we got TSMC's monthly number. Always like to have a look at that for a broad indication on the semiconductors. And this was September as well, so it is the close of quarter three, July, August, and September numbers. So this sort of gives you a decent idea for earnings season for your Nvidias and your AMDs and people like that. Or whether this would be Apple. Apple sort of still, I think, 20 to 25% of TSMC's revenue, so it could be, strong iPhone sales. But yeah, just under 331 billion Taiwan dollars, up 31.4% on September last year. So very, very strong, and sort of continuing this trend of sort of 25 to 45% year-on-year growth. So that is very, very good. Again, I think they said 2025 was going to be a flat year to possibly slightly down. So yeah, AI has surprised. I keep saying it. It's surprised even TSMC. We got Equinox Gold's production numbers, 236,470 ounces for Q3. That's pretty good. We know they're sort of ramping up their new mine, the Greenstone mine. So Greenstone mine on the Equinox side, and the Valentine mine on the Calibre side has only just started to pour gold late in Q3, so that should be coming along quite nicely. They're saying they anticipate 15 to 30,000 ounces in Q4, and should sort of push up to 45,000-ish per quarter by Q2 2026. So 2026 should be a pretty strong year, and then sort of presumably 27 ever so slightly more, with a full year of Valentine production, and hopefully all the sort of bugs and everything at Greenstone ironed out, because they're still saying 2025 guidance for Greenstone at 220 to 260, and it's supposed to be now 330 per year. Was originally 390, but unfortunately they have had to revise that down even long term, so that was a bit of a shame. But yeah, the market sort of seemed pretty happy with these numbers. They're up quite strongly for the week, and well, gold at sort of going over $4,000 as well certainly helps on that. But yeah, they continuing to reduce debt, 139 million off their debt, which is very good. That should continue, and yeah, the plan is sort of coming into place basically. So my sort of large options position, allowing all of next year, is looking pretty strong. So Next Era Energy, I've made a new purchase, wanting a little bit of exposure to the energy sector, and yeah, a couple of people sort of in the last couple of weeks have been sort of asking what I'm looking for in picking these new companies, what I'm sort of using stats to analyze them and that sort of thing. So I thought I would have a little case study on Next Era Energy. I won't go through sort of absolutely everything. Maybe sort of cover a little bit more in their next earnings release, because this is sort of a little bit old data now. But yeah, basically I wanted a sort of a couple of energy plays. I've also got my EQT, the natural gas people. I didn't want to go for the sort of basic, ExxonMobil and Chevron and people like that, because I just can't see oil sort of being the dominant energy sort of going forward. Obviously, those two are involved in natural gas as well, but it's primarily tied to the oil price, where sort of Next Era Energy has a great deal of solar installation and natural gas sort of on top of that. So I liked the mix basically, and yeah, their their presentation looks pretty strong to me, and the um, statements of income look pretty good. Presentation sort of gives you an idea of what they're doing and their sort of revenue breakdown and that sort of thing. So they're sort of saying what they've got coming by 2030, or this is what the total energy sector is sort of looking to add, and they're saying small modular reactors are sort of very expensive. Everyone's getting really excited about them, and Rolls-Royce, the new sort of gas coming online, they're saying takes quite a long while, and solar and wind basically are very quick to deploy. They sort of note here, new nuclear 2035, gas 2030. We are getting some gas. I think that's a little bit biased, but yeah, basically renewables are the easiest way, and they're saying we need to sort of double electricity demand basically in the next 25 years. So that's a strong sort of secular tailwind for next era over the next sort of 10-15 years. So as far as what I would be looking at, you can sort of come to something like Yahoo Finance. It's worth checking the financials against the actual financial statements just to sort of double check that they do match up and there isn't sort of bugs in Yahoo Finance. But generally, they seem to be okay. And yeah, there certainly seems to be solid revenue growth for next era. Obviously, they're sort of expanding their energy profile quite a lot, funding that a lot with debt, but they seem to think that it's worth doing. So yeah, 17 billion up to 25 billion in the last sort of 4 years on revenue, and profit sort of expanding quite well, 3.5 billion to 5.9 trailing 12 months. Those are sort of down a little bit from peak, but solid margins as well, sort of 3.5 billion a few years ago, down over 17 billion. So it was 20% net margin for an energy company. I would say is pretty solid. There isn't there is quite a bit of other income expense, so earnings from equity interest and what would often be write-offs in the sort of special income charges, but they've got some gains on sale of business, so you can sort of possibly look at operating income over total revenue. That's a little bit lower than net profit because of these adjustments. They have some interest to pay, obviously, on their debt. But yeah, it's worth sort of comparing net income over revenue, operating income over revenue, and gross. But yeah, so it is just worth doing a check on net profit margin compared to operating profit margin. Obviously, if operating profit is lower, then there's some adjustments and one-off sort of non-cash charges and things going through there, presumably, as well as interest, which should take into account. But yeah, operating margins looking pretty good. So that was 2021, coming up to the last 12 months, sort of 5.9 billion over 25.9, so 22.7% net profit margin. Pretty solid, and yeah, operating income is more than that, so 7.65 over 25.9 billion, 29.5% operating income, and you can see there wasn't a lot of other income expense in there, so there's not a lot of adjustments going on, but there is an awful lot of interest because of the debt. Tax was negative this last 12 months, so you do have that. That won't always be negative, but yeah, basically financials looking pretty solid. You can obviously dive in further into their statements and sort of see what's causing this, whether they're sort of spending an awful lot on G&A, the sort of admin and general staff costs and things. You can go through sort of whether they do adjusted income and sort of see why, what they're adjusting. Do they sort of start removing out stock-based compensation and that sort of thing? Everyone just seems to be reporting adjusted profits these days rather than proper net profit, GAAP net profit. They'll call it non-GAAP. So yeah, just those things worth looking out for, basically. So coming down to their balance sheet, I would always have a look at this. So you can this is on the annual. The annual always goes up to normally end of last year. It's sometimes a little bit different. You can click on the quarterly if you want to sort of get the most recent numbers, which is probably best for the balance sheet because it's an ongoing sort of cumulative thing rather than net profit is strictly for each quarter. So yeah, you can look at sort of total assets. Obviously, with them being an energy company, the sort of vast majority of this is PPE. It's the actual operations and sites that they're running. That's increasing quite a lot. 145 from 133. I thought that might have been a little bit more in. Oh, sorry, that's in the quarterly, isn't it? Yeah, so 138 up from 99 billion sort of in just 3 years, and then up to 145 over that 1 year. So it is 1 year growth. And yeah, the cash sort of current asset side is surprisingly low, 1.7 billion, sort of fairly unchanged, sort of a little bit up during that period, and sort of up quite a bit from 2021, down a little from 23. But compared to their total debt, is up from 54 billion a few years ago up to 82 billion. I don't know if that's changed. Yes, it has increased again. So 93 billion of debt in the last quarter. We'll see what they're up to in a few weeks. And yeah, that is rather a lot of debt. So for having 1.7 billion in cash, 93 billion in debt, you can sort of come down to total liabilities and see exactly what it is. Current debt, 4.027 billion in commercial paper and other borrowings. So some people's debt will be leases and mortgages and things on buildings, which they sometimes exclude from these numbers. And yeah, I would sort of still call that debt, really. But yeah, the total long-term debt and credits and other long-term liabilities, so total of 114 billion is rather a lot. So that debt carries forward to net interest income or interest expense because they don't have a lot of income at all because they only have less than a couple of billion in cash. So interest expense rather has gone up from 1.2 billion to 3.9 in the last 12 months due to sort of rates increasing. They obviously have some floating rate debt or some that they've refinanced and obviously taken on new debt, so that would be at sort of current rates. So yeah, 3.9 billion in interest when you've sort of got 7.6 in operating income. It's quite large, but you still get net profit being being quite high. You could say operating income less interest and just take that, and that would be sort of quite a bit lower, but they still see it as worth it. I still think these are quite reasonable margins compared to, your sort of Shells and Exxon Mobil's and people like that. So, yeah, and they have, a horrendous amount of debt themselves. So, yeah, it just doesn't seem out of the way with energy companies. So, yeah, that would be a sort of initial look at what I keep an eye on when looking out for these companies. You've got other little things like shares outstanding. Are they doing buybacks or are they issuing shares? It looks like Next Era, obviously, they're expanding a huge amount. They're not really spending money on buybacks. There will be a little bit of stock-based compensation in there, so shares are sort of slowly increasing a bit each year. 1.96 billion to 2.05 and 2.06 just about. So yeah, there's that. I'm not too bothered about that when they're aggressively expanding. So yeah, looking pretty good, and I decided to buy. Economic news this week is quite funny with the US shutdown. It is basically a ghost town in here. You've got a few sort of UK bits. You've got the Atlanta Fed still do their GDP now. It's just sitting at 3.8%, which is, to be fair, very, very strong, and probably sort of gives people an idea that things are running quite well, aside from sort of labour issues. Wednesday sort of got practically nothing. Thursday pretty much practically nothing, and Friday sort of basically nothing. So it's sort of like we'll come back to this when there's something to look at. So portfolio-wise, there's been quite a bit of changes. I've moved some stocks out of here into the ISA, sort of thinking they would just be a little bit better in the ISA, and I've got cash coming into the ISA from selling some of the crypto and gold stuff. So yeah, thought there's no point in having cash in the ISA and investments in the invest account. So starting to sort of move some of those over, but also buying some stuff in here. Bought some Evolution, CF, FOMC, and Adecco Agro, and a little bit of AB as well. Some of these I might end up moving into the ISA, so there is quite a bit of FX fee going on here with all of these sort of foreign stocks. You have to pay £20 selling and rebuying these to put them in the ISA, even just on a like an £8,000 holding is sort of quite expensive. As if these start to rack up long term, these could end up being 30, 40, 50 grand positions. The FX fee will actually start to hurt. So I can see people's draw to basically just go for UK listed world ETFs, not paying any of the fees. But you can get outperformance with individual stocks, and that is what I'm hopefully going for, with a little bit of downside protection. I like to sort of think my portfolio may potentially underperform the broad market, sort of in a positive market, but sort of potentially outperform it on the downside with my diversification. So on the ISA side, I've been doing quite a lot in selling a little bit of Kur mining, selling quite a bit of the Bitcoin miners, CleanSpark. So I think it was at 3,000 odd shares not so long ago, possibly even last week. Bought a little bit of Amazon. Been adding quite a bit to my little REIT selection, sort of keeping these all at a similar percentage. That was the idea. Sort of, I might sort of rebalance, if one starts outperforming the other, but sort of broadly, I would keep these relatively similar unless I, start to have sort of thoughts about one over the other. But thinking they all look pretty good, so I added quite a bit to them this week. Not Next Era Energy, Prologis. So Next Era are just in there, sort of being a similar amount of shares. But yeah, so they're in the ISA now. Selling quite a bit of iron. I think I was at 600 shares. So obviously the options side of this is much larger than this, but just selling them in the ISA as well. A couple of new buys. Sort of on the I'm calling this agriculture. Yeah, I'll change that to agriculture as well. because they are sort of mainly tied to agricultural machinery. So AGCO and Deere, kind of competitors. AGCO being the sort of much smaller competitor to Deere, basically smaller brands and sort of, well, worse brands to put it bluntly. But you know, Deere are the big player. And yeah, thought they would be sort of quite good to complement each other. I was originally thinking to have Caterpillar as well in this on the sort of construction side, but they look a little bit expensive to me. I might end up doing it, but yeah, so we'd sort of have those three maybe as a little machinery and sort of industrials play. Maybe I should change these to industrial. Don't know. Yeah, EQT as my sort of natural gas bet as well. I think I mentioned last week. Hive Digital, been selling quite a bit of them. Samsung is sort of just rocking along, looking quite good. Been selling a bit of Riot as well. This is a new stock, I believe. I don't think I had this last week. Rockwell Automation, I sort of bought earlier in the week. Kind of a somewhat of a competitor to AB Limited on the sort of automation, factory automation, and hopefully humanoid robot components. I'm not really looking for people that are building actual robots themselves. I don't even think you can buy any sort of public companies doing that other than Tesla. Everyone getting super excited about that, of course, but would prefer to go for a sort of picks and shovels play if there is one, and sort of Rockwell potentially gives you that alongside just your general robotic arms and things for automation. We need to, even aside from robots, we need automated factories sort of more than ever, and so does the rest of the world. So I think between AB and Rockwell, sort of gives me a little bit of diversification in that area, and yeah, quite happy with them. Nothing happening on the interactive brokers side really on the ISA. Just sort of stock's doing quite well really. 188 on KGHM. That's had an incredible week. It's up 60% now in here. So yeah, very happy with them. Hive obviously pushing up. I did sort of push into $7. I think it went to $7, sort of 30, 40, 50 on Friday morning, and then got whacked down. But I did sort of take the opportunity to to take some of that profit in the ISA, in the Trading212 ISA, and on the option side. And Pan American sort of bumbling up against recent highs, certainly. A little bit more KGHM, of course, in here. Quite happy with that. Would have been maybe nicer to have a little bit more in there, but yeah, I suppose it's quite a big position already between the two. So yeah, the option side, I've been selling quite, I would say, quite aggressively. I think I was at 100 contracts last week. Obviously down from 320 contracts that I bought originally. Now down to 55. So yeah, it's been an incredible run. The remainder is now up 124 times, which is crazy, but you could also say that I've left an enormous amount on the table. Well, it is hundreds of thousands if I'd have obviously held it all until today left on the table, but you never to know with these sort of things, and I don't really want to be tempting fate, basically sort of getting nightmares of the 2021 bull cycle with the crypto miners, me in sort of Argo blockchain and people like that, and Hive, I think I was back then. And they topped in 2021, sort of mid-February, with Bitcoin at 54,000. So it topped out at 64,000 a couple of months later, and then nearly 70,000 later in the year. So yeah, the Bitcoin miners kind of went early, and part of me sort of thinking they're rocketing up now, really without Bitcoin sort of backing it up. They're rocketing up on the AI story, or sort of Iron and Riot and Hive and people like that are. CleanSpark are sort of now getting going, but I think part of that is potentially pivoting to AI, and yeah, just sort of thinking if that potentially starts to sort of fizzle out at the same time as Bitcoin going up. There's a possibility, quite a significant possibility, that the miners could again top before the Bitcoin top. I imagine a lot of people will be thinking, that all of this AI gain is locked in now, and all of the Bitcoin gain to come will just add to that. But I don't think there's any guarantee of that. And they've obviously been, all sort of knocked quite a bit with yesterday's actions. So yeah, I'm being cautious and being sort of at my retirement portfolio number now quite comfortably. I'm deciding to just take it off. I may be selling way before the top, but I'm sort of relatively comfortable with that. I bought these very, very low. I was buying iron options when iron was at 7, and they sort of hit $68 yesterday. So yeah, the Baron Rothschild saying of buy now and sell too soon is sort of, I think, sums me up relatively well, or what I'm sort of looking to do. I get quite bold in the bear markets, and when things are sort of rocketing up, I will sort of take profit a little bit early, whereas other people sort of kind of wait for the cycle to get going and then sort of want to be selling close to the top because they weren't buying in the lows. So just a little bit different way of managing the portfolio. So yeah, sold quite a lot of iron. Most of that is sitting in cash really at the moment, and yeah, selling quite a bit of Hive as well. Not going quite as aggressive selling Hive because they're, I think, still lagging a bit, and that, from coming from negative to now 555% in the green, that's an incredible move. And yeah, Equinox just sort of bumbling along. It's up about 20,000 this week. Again, was red sort of a couple of months ago, so looking great. Coeur mining, sold a little bit of Coeur mining, but that's sort of barely moved. Bought a little bit more B2 gold. I sort of went a little bit aggressive. Bought some January 2027 $10 strikes. So it's possibly a little bit harder to get to, but I think there's potential there with gold at all-time highs and them sort of expanding. Riot, sold quite a bit of Riot. I sold all of my. I had some January this coming January, 3 months away, $35 calls, and Riot sort of at 21. That is looking a very lofty target, to be fair, even though they are going up a couple of dollars a day sometimes. Yeah, that just wasn't wasn't making me particularly happy, and with them being significantly in the green now, they were sort of 60% down. I was like 60% down on this position before. I thought, yeah, get out of Riot for the most part. Sold a little bit of Cypher as well. They're sort of doing similar to Iron, not quite as good, but yeah, pretty crazy, 35x. So I think I had 40 of these, now down to 10. And yeah, IMAX sort of is got knocked yesterday, so that's a little bit down for the week, but not too bad. Bought a little bit more Nakamoto as well, just a little sort of bet on a treasury company. They were sort of going down as Bitcoin was rising, and I thought, well, there's potential there for that premium to come back, but yeah, 30% down at the moment. And CleanSpark has gone, quite significantly into the green now. Got knocked yesterday, but yeah, $20 by November is basically there now. So it's starting to get into pretty solid profit. So yes, overall, very, very interesting times. I imagine a lot of people are sort of hurting a little bit after yesterday and a little bit annoyed with Mr. Trump, but we'll have to see what he's looking to do, whether he does have a meeting and whether they can sort of kiss and make up. So leave your thoughts in comments below. Let me know how you guys are doing, and like and subscribe. See you soon.